All right, market is up a little bit. S&P's up a little bit. Nasdaq's about flat. So I did a couple of trades today. Let's go over them. First thing is Eli Lilly. I had put on two bull call verticals here. That's the first one, and then I did a second one here. You can see today it had a really good day. It's up 3.2%, but it's way off its lows. It was poking above 308 earlier. So I closed one position and then I took half the other position. So you can see here on the first position, I had closed this out in its entirety. It's this one here. So that's today. We had originally sold the June 17th 310 calls for 570. We had bought the June 17 300 strike price calls for $9.36. Today unwound them and made about 24 and about call it 25% on the trade, which is important because I've been down in that portion of the trade for so long. So I decided to get out of the way. I also closed I closed half of the second one. So here we bought the July 15th calls 310 strike. I'm sorry, we sold July 15th calls 310 strike for 730. We had bought July 15th calls $300 strike price for $10.90. Today we unwound it for about a 51.4% return. Right, we're going to go to closed positions here and we're going to take a look at Monster Beverage. It's this. So you can see, so this was Thursday, Friday, and then Monday. Had a really good run from about 84 bucks up to 90 bucks. It's up 1.1% today. So we made some money. I decided to take the profits on this one. Okay, so we had originally taken half the position off on the 13th, and we closed out today, the 16th. So we had sold the June 17th 95 calls for $1.03. We had bought the June 17th calls, $90 strike price for $2.13. And today I closed out that position for call it 127% return. All right, here's a new one today. So this is the bull call vertical. You can see Adobe came way off its lows on Thursday, had a good day Friday. It's having another good day today. It's up, it's off its lows today. So we did this bull call vertical. So sold the June 24 calls 410 strike price for $20.09 and bought the June 24 calls $400 strike price for $25.10. And you can see here where we want it to be. We need to be in this green shaded area. That level here is 405.01. So we're on the right track. I like the way it's kind of breaking through its 20-day moving average today. So hopefully if we do get a little bit of a sustained rally, this thing should trend a little higher. This is Kinder Morgan. So I did a bull call spread on this, the vertical. And I did it this morning. You could see it's up 3.7% now, having a really good day. I liked it because it's had this uptrend, and it's been testing its 20 and 50-day moving average. For the most part, its 50-day moving average has really been holding. It came down here, settled in, popped, came down here, settled in. Today it's moving higher, so I'm anticipating that the uptrend will continue, and I took an upward bias in this name. So with this bull vertical spread, I sold the July 15th calls, $21 strike price for 20 cents, and then I bought the July 15th $20 strike price calls for 51 cents. And you can see off of that move that we're seeing today, we're up about, call it 15% in the trade already. I always like when a trade starts out good. Leads me to believe that we're on the right track. Here's Autodesk. So this thing is in a downtrend. You can see here, since this gap down, it's been riding its 50 and its 20 day. Came up here, tested the 50 again, couldn't hold it, tested the 20, couldn't hold it, kind of testing the 50 here, couldn't hold it. Today, between yesterday and, between Friday and Thursday, had a big move up. It seems to be running into this downward resistance again, so I just went long the puts here. So I simply bought the May 27 puts, $190 strike price for $8.54. And, we have small profits in the trade, but I anticipate that taking a downward bias on this name would be beneficial, or at least over the near term. All right, here's Coca-Cola, KO, ticker symbol, bull call vertical on this one. I'm anticipating that it's been trending higher, Came down pretty heavy here, broke through its 50 and its 20 day, but regained it pretty quickly. Came down, tested the 50, tested the 50 again. Seems to be trending higher. I'm anticipating that this thing is going to keep going higher, so I'm taking upward bias on it. I need this thing to be above, that's what, 66.81. Right now trading at 66.19, so we have some time for this to work. So what we did here is we sold the May 27 call, $68 strike price for 30 cents, and went ahead and bought the May 27 call, $66 strike price for $1.10. I'm sorry, $1.11. And you can see after the move it's having today, we're up about 4% in the trade already, which is nice. So just increase some of the upward bias in the portfolio, anticipating that there might be a little bit of a bear market rally. I don't know if we hit the lows yet, but certainly we're oversold, so I'm anticipating some upside here. All right, that's all I have for today.